All right, so good afternoon, everyone, and welcome to another training session. This should be our 9th training session since we started this training for Danuvier Crypto Systems. My name is Daniel Luvetesiwi, and I'm the Chief Programming Officer at Danuvier Crypto Systems. Now, in today's training video, we are going to be doing two things. We're going to be looking at some technical indicators because, like I said in previous videos, we are going to be basically looking at chart analysis. As you can see on my screen, we are going to be analyzing the chart. But for today, I'm going to be showing you two indicators that work very well with our system. That's the robotic system that sends us the signal, and then these indicators are going to guide us on placing the trade after we have gotten the signal from the bot. So, and after we have looked at these indicators, we are going to go to some past signals that we got throughout this week. We're going to look at those signals, we're going to look at the indicators, and we're going to analyze them, and then we're going to see how we are able to interpret it when the bot sent the signal and how the price reacted. So let's dive right into the video. So we're going to be looking at two indicators for today. The first indicator is going to be called the EMA, or the exponential moving average. I will take it again. The EMA, or the exponential moving average. Now, the EMA is simply a mathematical formula. What it does is it calculates the averages of prices for a certain amount of candles, and it plots a line on the chart. Now, let me just show you what that looks like. Now, if I am to zoom, let me zoom in. Okay. Now, this is my chart. I have zoomed in. This is a live chart, by the way. This is not a screenshot. This is a live chart. So you are going to notice a blue line. This blue line right here. You see this blue line? That is called the EMA, the exponential moving average. Now, what the EMA does is it calculates the averages of prices for a specific amount of candlesticks, and it gives us a plotted representation on the chart. That's what you see with that blue line. So if prices are going up, the EMA is going to be plotted in an upward direction. And if prices are coming down, the EMA is going to be plotted in that same direction, because it's calculating the average of the number of candles and is plotting it like a graph on the chart. So that's for the EMA. But we are going to go in depth into the EMA, how we can set it up on our charts, the settings, the configuration, everything. We're going to go into it. So the second indicator we're going to be looking at is called STC. The full meaning of STC is called Sharp Trend Cycle. I will take it again. STC, full meaning Sharp Trend Cycle. Now, in trading the markets, whether you are trading forex, crypto, stocks, ETFs, we have two different kinds of cycles. When it comes to trading, we have buying cycle and we have selling cycle. Or in a professional way, we have the bullish cycle and we have the bearish cycle. Now, if you look at the indicator, this is the indicator right here. Below, this indicator right here. That is called the Sharp Trend Cycle. So now what this indicator does is it measures how long a cycle is going to last. That's what the indicator actually does. So we're going to go in depth into both of them, how we can set it up on our charts, and how we can use them to interpret prices when the signal, or rather interpret signal when the signal comes from the bot. This will also give us a sense of timing as to when to enter our trade and when to actually stay and be patient for the right time for entry. So I'm just going to remove all of them. Let me bring my camera down. I will just remove them for now so that we can go and input them all over again so you can see how it actually works. So I remove the EMA first. Okay, then I'll remove or we can leave the STC for now, but I'll remove the EMA. I'll just show you how to get the EMA. Okay, so let's go to below here, this below place. We are going to get some options. You see these three dots here. So we're going to be selecting that, and we're going to be selecting indicators, as you can see here. I'm going to be selecting that. Now the first one we're going to put on the chart is called EMA. So all you need to do is just type here EMA, and you can see it's the first one right here. That is the exponential. Look at it, moving average exponential. That's the one we want. So we select that one. So as I said, moving average exponential added to chart. Okay, so we'll just close this here. As you can see now, it has plotted it on the chart. But now we want a definite figure, and that figure is the number of candles that it is going to calculate the average for. And the one that we have done our testing and we've decided what works best with our system is 10 period EMA, which means the EMA is going to calculate the average of 10 candles for any time frame you are on, whether it's 15 minutes, 1 hour, 4 hours, daily, 5 minutes. But for the sake of this lesson, we are on the 1 hour chart. If you look at it right here, this is the 1 hour chart. Okay, so we're going to come here and we're going to select that, and we're going to select the setting icon right there, this setting icon. So we select that setting icon and we're going to set. Okay, you can see some figures now. Now you see length, source, offset. So source and offset should be left as default, but the one that we are more particular about is this one they call length. So that's the one we're going to be changing. We're going to be changing it to 10 because currently it is measuring 9 candles, but we want it to measure 10 candles. So let's say 10. Okay, and then we press OK. So as you can see, our EMA has now been plotted on the graph, or rather on the chart. So the next one we're going to look at is what is called shaft trend cycle. So the same place we went to, that's right here. We just go there and then we select indicator. Now this time around we're going to type STC. Okay, now this is the one we want because there are so many STC, so many developers and traders actually put their indicators out there for people to use. But the one that we have found interest in is this particular one right here. This is called shaft trend cycle, and it was created by Michal Kraj. Okay, so we'll just select that one. Now when we select, although I don't need to select it because I already have it on my chart, but what I'm going to do, I'm going to go back and I'm going to open the setting of the STC as this right. Okay, sorry, that's this right here, that setting button. We're going to open that so that we can know what the setting looks like. Now this is the setting for the shaft trend cycle. As you can see, we have source, and it says source is closed, which means it's measured on the close of a candle. That's how the STC. So when the candlestick closes, it takes its calculation. Then we have cycle length. And if you can look at the figure, it says cycle length 4. We have fast length. Okay, we have slow length. And then the smoothing, we have EMA. So this just tells you that this indicator works best with the EMA. Okay, and I think the rests are not so important like that. Alert, pattern, look back. Doesn't really, it's not so important like these ones right here. Not so important like these ones right here. Okay, so if you want to set it up on your chart, just watch the video, or you can take a screenshot of the video and just look at the exact figures that have been imputed in cycle length, fast length, and slow length, and then just input it on your chart, and it's going to appear like this. It's going to appear like this, just the way you see it down here. Oh, sorry. Okay, just the way you see it down here. It's going to appear like that. Okay, so we've been able to set up our EMA that measures 10 candles on any time frame. It might be daily, 1 hour, 15 minutes, 5 minutes. Doesn't matter. We have programmed it that it should calculate for 10 candles, the averages for 10 candles. That's what's called the EMA. And the EMA is the exponential moving average. Then the second indicator is what is called the STC, which is the shaft trend cycle. Now, this shaft trend cycle is what measures buying or bullish cycles and bearish cycles. Now, I'm going to be going in depth into each of them and how we can use them to anticipate price change in direction. So that's what I'm going to be doing now. So now, if we go back, you can see that price was actually moving down. So now we are in a downtrend. Now, I want you to notice something. If you look right here, if you look here, you'll see that price was initially trending up. Now, when price got to this point, this is actually a resistance level. If you have watched my previous video, you know about resistance, you know about support. This is a resistance level. So when price got to that level, the resistance held there for a while and then pushed back down. Now, as a trader, you might be confused and say, okay, I don't know how I'm going to enter this. When do I enter? When do I make my entry? Now, when the board sends you a signal, the board can send you a signal at any time from this point. It can send you a signal. But what you must always keep in mind is that whenever price is below the exponential moving average, which is the EMA, then that is a change in direction. That's a shift of momentum, which means buyers are no longer in control and sellers have decided to take over. So if you look at it right here, you see that look at that candle right there. That was where the crossover happened from a bullish momentum to a bearish momentum. And if you look at the whole price action from there, everything goes down. Now, if you look at this one now, when we came up to this level, what happened? When we came up to this level, price crossed above it again. And now we changed to a bullish momentum. So you can see that. Now, if we move further, you see that again, price crossed below it again. Right here. Price crossed below it and we are now in a downtrend again. So you can see that when there is a crossover from up to down, you know that price has changed direction from bullish to bearish. And whenever there is a cross from down to up, like in this instant right here, you can see how price has crossed above, or rather the candlesticks have crossed above above or below. Below means price is in a bearish trend. When the candlestick crosses above, it means price is in a bullish trend. Okay, so I think this one is self-explanatory. So maybe during your free time, when you are practicing, you can just use this indicator. It's a very, very, very good indicator. It helps you to know where the direction of money is flowing to. Is money flowing in a bullish direction or in a bearish direction? Look at this one again. That was a crossover, and then we have this crash, this very big crash down. So you can, at your free time, take a look at it. And now look at it. This is the current day now. We are in the current day now. This is Saturday, and this was where price crossed over right here. So as it is now, we are now in a bullish trend. If you look at it, prices are now going up. So that is that for the EMA. Now let's go to the shaft trend cycle. Okay, so for the shaft trend cycle now, in every trend, whether bullish or bearish, we have something we call cycles. These are phases in the market where buyers and sellers take control. So these phases in the market is what is known as cycles. Now, like I said earlier, for any trend, whether it is bullish or bearish, there will always be times when buyers will take control and sellers will take control. Now, this next indicator is going to tell us exactly at what point buyers are taking control and sellers are taking control. Now, what do I mean by buyers taking control? It simply means that at that point in time, buyers are the ones that are more dominant in the market, which means their orders are more stronger in the market than the sellers. So let's go back to the same example we did with the EMA. So the same thing here. If you look right there, that was where the crossover happened. But now, when you look at the shaft trend cycle, you will see that if you look at this right here, that red line you see there, that indicates a bearish cycle. And this bearish cycle is what points to this movement in price. Look at these red candles. So you can see from this red candle to this red candle, these were all selling pressure, which means the sellers were in control for that point in time. Since we are in a 1 hour time frame, which means these 3 candles represent 3 hours of trading activity, which means for 3 hours sellers were dominant at this current time. That's what it simply means. And this is what the shaft trend cycle has just shown us. So now that we are in a bullish cycle, which is right here, you can see where the cycle started from. Cycle started from here, which means at this point, from this candle, buyers became dominant and their orders pushed the price up. And if you look at it, they pushed the price up with force. So you can see. So, and now when it got up to this point, sellers decided that they're going to come in aggressively. And from that candle, their selling pressure became more than the buyers, which means they have allowed the buyers to buy and make their money. Now the sellers now want to enter and also drive the price down. And if you look at from this area, okay, sorry, let me just put that up very well. From this area right here, if you look at this whole area, this red line, look at it. This now points to, which means from here to here, the sellers were in control of the price. And that's why they drove it down. And that's why the thing crossed over.